Hi, I'm Donnie Buchanan from entrycounts.com. In this video, we're going to look at reclassifying expense accounts into equity. The reason we do this is because sometimes we have to show either income tax, dividends, or distributions in equity instead of expense. On your screen right now, you can see in our expenses, we actually have dividends and income tax. So we want to move those out and put them in equity. Here's the steps you need to follow. First step is you basically need to duplicate these accounts right here with their names in equity. How do we do that? First, we go to the chart of accounts screen. Best thing to do is search for the account. Here I can see the dividend declared and paid expense account. What I'm going to do, I'm going to copy the name. Because the account number is not 150, I'm going to create one very similar so it's easy for me to identify. What I'm going to do here, I'm just going to put the word equity at the end, and in the reporting name I'm going to put dividend declared and paid. Second job, I'm going to find the income tax expense account. This account number is 175. I'm going to copy the name, add an account, 875. I'm going to change the name here to equity. In the reporting name, income tax. Now you can see here I have income tax expense 175, income tax equity 185. Same for dividends, I have 150 dividend declared and paid and 950 dividend declared and paid in equity. What I'm going to do now is go back to the journal and reclassify these. So on my manual journals, I'm going to go to the income tax journal, edit, and here I'm going to type income tax, find the equity account, and change it. I'll do the same for the dividend. Now, if I update my income statement, these accounts have now been removed from the expenses and they are now sitting in equity. Next, I'm going to go to Advanced Accounting and Report Codes. In here I can see the new equity income tax account I've set up. So I need to map that to my user defined. And also with dividend declared, I need to map that to dividends. Now if I go to my appropriation statement, you can see that these accounts are now presenting in the equity section. This is the preferred layout for most of our clients. Appropriations should be done in equity accounts. However, there's one final job. Let me show you something here. Let's go to this financial year, compare with one period. What we have to do is we have to do what's called a rollover journal. Reason being is that Xero does not roll over at the end of the financial year. So how do we do a rollover journal? It's simple. You clear these two accounts, which are debits, to retained earnings on the 1st of July or the first day of the financial year. So let's go here to a new journal of 75,000 and the debit to retained earnings. Now, if I update the appropriation statement, you can see that we have cleared these two balances on the 1st of July to retained earnings, and now in 2024 we can apply the same system with appropriations. I hope that was helpful. Have a good day.